All right. Thank you all for being here. I'm Jude with the Builders Association. This is one of our monthly ACE classes. They are sponsored by 84 Lumber, so next time you see Judy out and about, just tell her thank you if you liked the class. And if you didn't, just don't say anything. This one is going to be on insurance options. We've got Nick Saunders, Bill Kennedy, and Sharon Weikel will be joining us shortly. I'm just going to let y'all go ahead and get started then.
Nick, you want to take it away?
Yeah, I believe I'm going to kick it off. My name is Nick Saunders. Hope everyone's doing well today. I'm with Mission Employer Solutions. Just a little bit about us before getting into the content. We're a local employee broker and employee benefit consulting firm here in Western North Carolina. I'm really focused on how to drive better outcomes and lower costs for local employers. We really focus on being involved with the entire process, from identifying what plans make the most sense for an organization to participate in, helping design and create and implement those plans, including claims management, just looking over how the plan's running, and then benefit administration, and basically bumper to bumper, if you will, or beginning to end from an employee benefit perspective. And a big piece of what we do, obviously, is to keep an eye on the market, what's going on, so we can help consult and advise on market trends, which is a big piece of what we're here today to talk about. So we're going to hop right into what we're seeing going on in the individual market. It's really a really new time with lots of turmoil and uncertainty in the individual market currently. A couple of the biggest contributors to that uncertainty is, number one, we have a reduction in carrier in the market. Aetna is leaving the HCA market altogether on January 1st. This includes both the individual and small group markets. So currently, and from what I understand from talking with some of the folks in the Home Builders Association, there's several members, or a lot of members, on individual plans. So this could be impactful information. But with Aetna leaving the market, if you have an Aetna plan, you're going to have to choose a new carrier in January of 2026. So just kind of have that on your radar. But what's even bigger than that is what's going on with the government shutdown and addressing the enhanced subsidies that have been available through 2025. They're set to expire in 2026, January 2026 right now. And it's going to create the return of the subsidy cliff. So right now, with the enhanced subsidies, they removed the 400% of the federal poverty level and used the percentage of income as a guide in terms of what folks would get as a subsidy. So even if you made above that 400% of the federal poverty level, you still had access to potential subsidy. With that potentially going away, once you go past that 400% of the federal poverty level, you'll no longer have subsidies available as it stands today. Again, there's a bit of turmoil here because of the government shutdown. One side is advocating for the enhanced subsidies to return. The other side obviously is supporting not doing that, or at least not doing that at this time. And the impacts of this are pretty traumatic. So we're seeing the steepest rate hikes expected and the largest in the last 5 years, ranging from 6.9 to 36.4%. And the weighted average on that that we're seeing is going to be roughly a 29% increase on the individual plans. And what's driving a lot of this is due to the enhanced subsidy going away. A lot of folks that are currently insured in the market, and a lot of healthy folks, are likely to leave the market. There's been projections of between 4 and 5 million people across the country that will no longer seek to purchase health insurance potentially. And that's really driving up the overall cost for a lot of people. That's in addition to just the treatments that are available in the market being so much more expensive as they become more technical and more advanced, and utilization going up as well. So it's a convergence of several things that we're seeing. On the table on the right are the requested rate changes for 2026 from the DOI. And so you can see Oscar, if you're aligned with Oscar currently, they're the lowest at 6.94. But you've got some carriers like AmeriHealth that are in excess of 36%, and Blue Cross is between roughly 22 to 32%. Currently, if you want to go out and kind of get ahead of it before open enrollment starts, if you follow the link to this site, you can actually plug in your information and see what your premiums might look like in 2026, just as a tool to kind of help you all plan and prepare for what's to come. We're going to move on to the group market next. I know that's not a ton of great news so far, but we'll stop and see if there's any questions around that for a moment. Awesome. Moving on to what we're seeing in the group market. Unfortunately, it's much the same story at the moment, although not quite as dramatic. Health insurance benefit costs are projected to increase in the group market overall 6.5%. And this is the 6.5% is actually accounting for cost reduction measures. So when organizations say raise deductibles, raise maximum out of pockets, change co-pays upward, it's 6.5% after taking those into consideration. It's actually about 9% according to Mercer, which is a large employee benefit consulting firm, without those cost saving measures. And so they're expecting overall the largest increases in 15 years. And it's even a little bit more so in the small group market. So that's the fully insured market that is ACA, Affordable Care Act compliant plans, and they're community rated plans. And so in Western North Carolina, we're expecting to see significant premium increases there. As I talked on the previous slide, it's also leaving this market as well. And so you're really going to be left with two carriers, right? In Western North Carolina, we really have 4 carriers total. There's a 5th, Angle, that's kind of entered the market. So you have Blue Cross, United, Aetna, Cigna, and then Angle. But Angle really only does self-funded plans, which we're going to talk a little bit about once we get past kind of the doom and gloom and looking like how can we make changes to find better cost structures and lower premiums. But really for the small group fully insured market, you're really going to be left with 2 primary players, which are Blue Cross and Blue Shield. They're requesting a almost 17% rate increase. And then United Healthcare, who's requested a 12.6 on one of the in North Carolina, and then 14.9 on some others. This really probably, even though it's kind of exacerbated this year and a little bit bigger this year, it's really part of a long-term trend that we're seeing in the small group space. And so only about 25% of small businesses now offer health coverage, and mainly due to cost driving those to be more expensive, which is down from 47% in 2000. So in the last 25 years, we've seen obviously a significant, almost half of the businesses that were offering health insurance have decided to stop, again, due to financial pressures associated with it. And then premiums during that time, or at least a similar time, rose from $2,827 for an employee in 2000 on average to $7,974 in 23. Just kind of reiterating that story. And so it doesn't have to be all doom and gloom. Obviously, there's folks all over the place, employee benefit consulting firms, other point solutions that are coming to the market to try to help tackle this and find ways to address the costs. And so what we're really starting to see in the group market is a shift towards alternative funding models. So in North Carolina, and it's been fairly recent in the last few years, self-funded and level-funded plans used to be capped at 26 benefit-eligible employees, and then it moved to 20. And now, in the past couple of years, it's gone down to 12 benefit-eligible employees. So the folks that can move from these community-rated plans to alternative funding models like level-funded or self-funded have the ability to go down to 12 benefit-eligible employees, opening up a lot more opportunity for smaller businesses. And we've seen this play out very, very well for organizations, including one client we have that's a home builder or a remodeler, where we were able to give them out, or we looked at the fully insured pool, but we were also able to look at the level funded pool where they're underwritten on their own accord and not just a community rate. And we're able to drive a lot of savings. And we see that over and over again when looking at those models. Right now, all the carriers, again, Blue Cross, Aetna, Cigna, and United have these options available in the market. And we're starting to see other firms like TPAs, MedCost is an example here locally, that are starting to come out with level funded programs for smaller businesses as well. So there's getting to be more options in this area for small businesses, or at least smaller businesses, to be able to find solutions that are able to get to lower price points. And what's even more nice about these types of programs is we start getting access to data and actionable data, so we can understand, as you know, if you're working with an employee benefit consultant or broker, they can understand what types of diagnoses you're having within your employee population, bring programming to help support those employees and help them lower their costs, which in turn lower the cost for everyone involved in the plan. After that, we're starting to see an adoption of ICHRAs and QSARAs. ICHRAs are individual coverage health reimbursement accounts, and QSARAs are qualified small employer health reimbursement accounts. Our clients so far have tended towards ICHRAs because they are a little flexible. But basically what this allows employers to do is subsidize employees to buy an ACA plan. And interestingly enough, even though we have seen some significant increases, or we're projected to see some significant increases in the ICHRA markets, our clients that have ICHRAs have been relatively stable so far in their costs. Obviously, it's early in renewal season for us, focused on 1/1, so we may see changes in that as we get closer to the enrollment. But so far, we're projecting it to be relatively stable, and the ICHRAs that we've had year over year since they have become available, which are relatively new. I believe they came available in late 2020 for January 1, 2021 effective dates, but they've been relatively stable year over year. What a lot of employers that we talk to really like about it is it gets them out of the decision game for their employees. So the employees actually typically use a platform to make a decision, and it aggregates the plans that are available in the market. And most of the systems have the functionality to plug in, like their primary care provider, what prescriptions they're taking, and help look at all the plans available in the market and narrow it down to the one that fits that employee's need. But even more so, it gives the employee choice or control over their choice on what carrier they work with, how the health plan is designed, and it can limit noise from an employer perspective, because you're really putting that on the employee and allowing them to make that decision. It also offloads some risk as an employer. Obviously, managing a health plan and dealing with those premium increases every year and so forth come with a risk and administrative burden. So it allows you to offload some of that, but still provide your employees a quality benefit. You do need to work with someone, either an ICHRA vendor, a broker, or both, so that you make sure you're building the plan correctly. You have all the compliance pieces in place, and that would be the case even for group benefits. You just want to make sure you have all those compliance pieces in place and you roll it out properly and manage it properly. But if you do so, we've seen a lot of success, and several employers that we have that have gone with ICHRAs would never leave unless something dramatic happens or changes in the market that would suggest they need to. And then there's other solutions that are popping up as well, both in Western North Carolina and across the state. One that's available right now, Chamber Health Insurance for Western North Carolina. It's through the Western North Carolina Chambers. It's a partnership with Aetna. It allows for a substantial administrative credit credited back to the employer if they're a chamber member. I believe last time I looked, it was like $600 per enrolled employee. So if you had 10 employees that enrolled in this program, you could get up to a $6,000 administrative credit that would help you reduce the cost of launching that benefit year one. Another one that's actually new, that's in process, we've not heard from Blue Cross that it's gotten final approval, is Carolina HealthWorks, which is working with the state chamber. From what we've heard from Blue Cross, it's going to allow employers to self-fund down to 2 employees. So creating that alternative funding model for even smaller businesses. And what they've said to us so far is that it should drive lower premiums for organizations. So more to come, because it's supposed to launch from Blue Cross and Blue Shield 1/1 of 26. But in the last meeting, it hadn't had final Department of Insurance approval. So we're waiting on that, but it'll be a new solution in the North Carolina market, specifically targeted to small employers. And then, of course, we have Sharon on today to talk about the group insurance trust available to the Home Builders Association, and Bill on to talk about Cakewalk Benefits, which are a couple other solutions available in the market. And then some other things that we're starting to see outside of just insurance. We've seen them purchased directly on their own. We've also seen them integrated with insurance selections, or some of these point solutions like direct primary care. If you've not seen this, there are many offices around Asheville, but it's where you pay a membership for access to a primary care physician, but you can go see them as many times as you need. Each membership or each office has, the membership works a little bit differently, but it can help create access to that doctor because you pay that membership. You can go see them as much as you need. Most of them have interactions telephonic and via text. So it's really just to help make sure that if you need access to a primary care physician, you have it. We actually build this into some health plans for some of our employers to try to improve access to care, while also we can create a plan design that kind of suppresses the cost on the insurance side to make it work. A new one here in Western North Carolina, specifically Asheville, that's kind of a combination of a traditional model and a DPC model, is PCP for Me. And it actually has Mercy Urgent Care built into it. So this is for groups, but if an employer, say, wants to develop a strategy around controlling the health insurance costs, but doesn't want to lose access to providers, we can build PCP for Me in, and you can go to, I think it's about 150 providers and primary care docs in Western North Carolina that have agreed to be part of this so far. Again, you pay a membership fee. It's about half of what we're seeing on direct primary care. You can choose whichever doctor you want to go to. You can change doctors, but interacting with the physician for just normal visits is free. There are some things that you would pay for additionally if you needed like x-rays and stuff, but then you can also go to Mercy Urgent Care locations for free. That is kind of a Western North Carolina specific solution, but we've implemented it in some of our groups and it can be hugely impactful. And then you're also seeing plans built around accountable care organizations. Aetna's done this most prominently in Western North Carolina, where they're the most prominent one in Western North Carolina, with their NC Connected plans that are available that typically reach a better price point than kind of their open network models. An ACO is a network that a health system has built out to take care of the Medicare population, but the outcomes were so good from that. A lot of health insurers are going down that road, and we're seeing pricing impacts from that as well. That's just the sources from the presentation. A few other trends that I didn't address, but that we're seeing in the market as well, is a big focus on behavioral health. So ever since COVID, kind of the wellness approach that we saw, where we were seeing step challenges and how do we get our employees moving, have really transitioned into how do we take care of our entire employee. And during COVID, obviously, a lot of that was mental health driven, and we're seeing that continue on in the market through EAPs, employee assistance programs, how plans are structured. So like Aetna, a lot of their plans now have removed mental health costs. So you can go to have your office visit without any charge. That is on their copay plans. Blue Cross has adopted more of a telephonic approach, with theirs creating access by telephone to behavioral health providers as well as primary care providers. So we're seeing it addressed in multiple ways. And then just employers providing a lot of support for their employees. And then finally, kind of getting past the health insurance, but thinking through, what can I do for my employees? What are trends that we're seeing in the market? Is really, how do we build a benefit package without putting a financial burden on employers? And so that's what we're seeing happen as well, where employer might offer voluntary dental, vision, disability, things of that nature, just so that they can, build a benefit package that would attract and retain employees without a substantial cost to the employer. With that being said, I want to turn it over to Bill to talk through the Cakewalk Benefits solutions and what he's bringing to the table to help support this team. Thank you.
I appreciate that, Nick, and that was a great summary. I'm going to try to share this screen if I can figure it out, right? It's always a challenge. So I'm Bill Kennedy. I think that works. I'm Bill Kennedy with Cakewalk Benefits, and like Nick said, some of the things that employers, once they start going through looking at health benefits and things like that, and what the cost is and what the coverage does cover, and moreover what it doesn't cover. Sometimes the alternative is, what else can we do to attract and retain clients? And that's what Cakewalk does. We work with small businesses across the country, and what we focus on is bringing enterprise or large company type benefits that are other than healthcare. Although we do touch on healthcare, and I'll get to that, but we do other than healthcare. So that's going to be like Nick said, dental, vision, long-term disability, short-term disability, life. And we are able to bring plan designs that are the same types of plan designs that you'd see in large W-2 corporations. And so with that comes guarantee issue, great product mix, and then the pricing that corresponds with that. Because typically when small businesses, if they aren't offering health plans, they really don't get access to the other benefits just because of their size, and there's just not a lot of attention put to that. The attention's always on the health side, and so we try to make it real easy to be able to access these benefits, because these are important financial and supplemental health components for people that they do appreciate and do want access to. So with that said, our process is very simple. It's a lot of self-administered with self-education, but these are pretty simple products to understand, and it relates to dental, vision, those types of things. But we have a customer service desk that helps in that regard. We do webinars. We have a full suite of tools to assist in that. And then the question always comes up about health. And Nick really hit on some points there. When you take in the rising costs of the average of Blue Cross and United Healthcare, as he said, is going to be 16, 17%. 25% of small businesses offer health plans to their people. That means 75 don't. So it's like, well, what can we do? Well, what we position is a health concierge into part of our equation. And I'm not suggesting that this is a great solution, but it is another solution. And what the health concierge tries to do is find the right fit for that individual. And sometimes it is, hey, you should use your subsidy through the HCA marketplace and go that route. Or a lot of times it's just affirming what you have is the best deal. But then they will also look for alternative plans that may fit and be available in each market. Now, our concierge work across the nation, so every market, every state is different of what's available and what's viable. But when you're trying to do group plans for small businesses, it gets tricky because of the cost, deductibles. People feel as though, hey, I'm paying a premium, but I really can't get anything out of it unless I have a $5,000 accident or a $3,000 accident or a high cost event. And so that's part of the why the 4 to 5 million people are estimated to drop out of the marketplace with these changes, these potential changes that are coming down. So that's where we look at some alternative components through our health concierge. So our take is you can see these Fortune 500 type benefits as well. We kind of label them where they help on everything else other than healthcare. And that you can do as a group benefit, whether you contribute to the cost of the benefits or some of the costs, or make them completely voluntary. It can be done either way. But we run the enrollment process. We can give you the breakdowns administratively for payroll deductions. We consolidate the bill of all the carriers because we may use different carriers. It might be MetLife. It happens to be the majority of these right now. But as we get the best of breed for various carriers, we consolidate and give you a single bill. You payroll deduct or pay the benefit, however you want to set that up. But we invoice you and remit on your behalf, and then you payroll deduct from the employees on a monthly or per pay period basis. So that's pretty basic, no different than income taxes or things like that. Every payroll company has a slot for benefits. So it's pretty easy to implement in that regard, and we make it easy to offer those benefits. But if you're wanting, so we do have the concierge for the health, but if you're wanting to pursue a group health plan, and that's where what Nick was talking about really comes into play, and he has a lot of tools that can help you do that. And then if you're just really looking for ancillary benefits, we can really fit the bill here. And so I think what the association has done is a nice job of trying to put together different vendors to help fill gaps and fill the various voids where people need help in various ways. And with that, that kind of leads to Sharon, who is really versed on the association plan from Blue Cross Blue Shield. And if there's questions, I'm happy to answer any further questions on Cakewalk and what we can do. But with that, I would turn it over to Sharon. And before I do that, Sharon, I would just say, I'll pop my number up here. This is our office number. And you can easily info@cakewalkbenefits.com. And we run an open enrollment for all BABRM members. And so your company, we will be getting some emails and some information on the annual open enrollment. And that's where you can get your company involved and offer ancillary benefits. And during that enrollment period, when you're first getting in, it's great product, great pricing, but you also have a guarantee issue opportunity, which is nice for those benefits that I had on the screen previously. So Sharon, I'm sorry there to kind of throw it to you and then take it back. So now it's for real.
No, that's fine. I'm not going to cut my camera on because I have lost my Google connection twice. It just shuts me down. So I'm going to try to use not as much bandwidth, but I'm excited to join you guys and share a little bit about the the Home Builders Association plan, we've been working with it since its inception. It had its 1 year anniversary this past July of 25. And I think it's great. It's a great option. It's worked really well for a lot of the employer groups, members of the Home Builders Association that we've worked with. And it is really kind of nice that you have lots of different options, because, getting into the world of employee benefits is definitely one that options are helpful, and being able to look and evaluate and figure out what it best fits the needs of your company is really important. And so, just at a high level, I'll just give some of what I think are the highlights about the Home Builders Association plans. So one thing that I really like is I feel like it simplifies it. Many of the employers that we've been working with have not offered benefits before. They had not group benefits. They have, employees that are on the marketplace. And as Nick mentioned, like, there's a lot of things going on with the marketplace, a lot of uncertainty, a lot of questions about subsidies, a lot of questions about cost. But lots of the companies that we work with have not previously offered benefits. So I think it really makes it easy for them to offer benefits. So it's easy to get a quote. And when the quote comes back, it has lots of different health plan options. But the other thing that I like about it is it's bundled. It has many other types of benefits, ancillary benefits, dental, vision, disability, work site, voluntary products. So you get back this whole nice package of benefits, and you can pick and choose. You don't have to offer them all. You can just offer medical. You can offer, other benefits in the suite of services, and there's no, pressure or obligation to offer anything other than what, suits the needs of your company. So that's really nice. And then I think the other thing about the home builders plans is just the administration of it all. That's one of the things that we find that in small companies, people are wearing multiple hats. They're, trying to handle benefits, hiring, maybe receivables, maybe they're the, owner of the company, and even more hats than that. And so there is a platform that's a benefit admin system that you have access to, that you can look at your bill. You can add someone if you have a new hire. You can delete someone if they leave your organization. So I think it gives you access to tools as if you were a really large company, regardless of your size. And when you get that quote back, it has 13 different plan options. And so that's kind of where we come in as the broker agent for Western North Carolina. When it comes back, we'll go over all the options, talk through the differences in the plans, try to help make a decision if you're, wondering like how this plan compares to that plan, or what most employers have chosen, things like that, help. Also, once the plan is implemented, if anybody has any kinds of issues with the plan, like a claim doesn't get paid like they thought it would, or, something gets applied to their deductible and they thought they already met their deductible, things of that nature, we give the home builders a dedicated account manager in our office that they have access to, from the point in time that the plan goes live all throughout the year. So one other thing I guess I would just say about the Home Builders Association plans is I think the original goal when the plans launched last year, they had a number in mind that they wanted to hopefully have those plans work for at least 1,000 people by the end of the year. And they far exceeded that goal. I haven't heard a recent head count, but they exceeded that goal by the end of the year. So that meant to me that it's offered a really good and viable solution to companies. We've seen lots of companies that, either don't have benefits currently that, it really has helped them. It's been an affordable rate for them and their employees. And then we've even seen companies that, have maybe are on the larger side of the spectrum, 15 lives, 20 lives and up. We even have one that we work with that's 100 lives. and they offered plans before, but these plans were much more reasonably priced. So it's, something that we're glad to look at for any company, glad to, offer our explanation of how everything works, help you get everything implemented, answer any questions, and then provide ongoing support throughout the year. I think if there are specific questions around the plans, I'm glad to address those as well. Or if there was something that you hope to hear me say about the plans that I didn't say, I'm also glad to visit any questions specific to the plans. Has anybody on the call had a quote from the home builders?
I know the association staff has their health insurance through the home builders, and it's been great for us, at least for me.
Good. That's great to hear, Jude. You always ask that loaded question, and then you're going to find somebody that did get a claim paid.
Right? Oh, you'll hear from me. No, I'm just kidding.
You'll take that offline. Is that my chat's not working, but but I do think it's a great option. And a lot of times what I suggest to companies that are looking at things of this nature is, look at all your options, like lay them side by side. One of the big questions that we get asked, if it is a small company, like, really small, just, 2, 3, 4, 5 employees, and, they've never offered benefits, that seems kind of daunting. A lot of the administration is taken over of this plan by the plan administrator, so you don't have to do some of the typical things that you would have to do. It behaves like a big plan. So if, someone's eligible for COBRA on this plan, which they, that's kind of a benefit. If, someone needs to be eligible for COBRA, but the plan administrator will be the administrator of COBRA, so you don't have to kind of assume that liability. And so there's just lots of bells and whistles. It looks like, smells like, walks like, quacks like a large group plan. Even, those many of the members of the plan are, very small employers. And then the other question that I think comes up for me a lot is, why should I even do this? Like, I feel like I want to offer group benefits because it might help me to attract or retain an employee. But, like, this seems like a lot. Like, I feel like I'm diving into the deep end of the pool, and why should I even do something like this? And, one of the main advantages for the business of offering group benefits is, the amount that you would contribute toward your employee's premium, which, Blue Cross does require that in order to stand up one of these plans, you pay 50% of the employee only rate. So, if just say you're an employer and you've got 4 people and you stand up one of these plans and just say the single rate is $500. I'm going to use 500 because that's easy math for me this morning. Then you would be required to pay $250 per month for that employee's benefit. And that employee would then have the balance payroll deducted. And so, if you had those 4 employees, like I mentioned, then that's $1,000 a month, $12,000 a year. And I'm certainly no accountant, and I don't pretend to be an accountant, but that's I always encourage, let your accountant know that you've now offered a group benefit plan, because those dollars that you contribute toward that employee's coverage should be also a tax benefit to your small business. So that's another advantage of just, kind of going down that path of offering a group sponsored plan.
That sounds great. Does anybody have any questions for any of our presenters here? Anything healthcare related or what they can do for you?
It's a quiet group. We've either overwhelmed them or bored them. I'm not sure which.
Well, maybe y'all just answered everything they needed.
I hope so.
I have a question. Can you hear me?
Yes.
Okay. I guess what are some of the best practices that you would give for somebody in navigating, say, the Homeowners Association health insurance program? And I remember during one of the calls we had mentioned some key dates. If you don't mind going over those.
Yeah, absolutely. So the home builders plans all renew with a July 1 effective date. And so what that means is, you could come on anytime during the year, but you're going to renew on July 1 just for administration of the plan. So, consider now it has, 100 or 200 or many, probably more than that now, individual groups that comprise the whole large group. And so if, 10 of them or 15 of them renewed every month administratively, that probably wouldn't go too smooth. It would be, really a daunting task. So like, for example, I have a group right now that's getting ready to go live. I'm helping them fill out everything today to finalize for an 11/1 effective date. So they'll go live on November 1 and their deductible will start on November 1. But in July of next year, instead of your typical November, one full calendar year, in July of next year, they'll renew, because no matter when you come on throughout the year, everyone renews at the same time in July. So July 1, 2026. So, probably 45 days prior to July 1, you'll get a letter that talks about your renewal information, if you want to make any plan changes, etc. So if someone, just say, for example, I recently got in a bad car wreck and got a hospital bill. So if I was in that situation and I, just say my plan started 11/1 and my wreck happened in December and I met my deductible in December, and then I'm just kind of sailing along from December through next year, and lots of my things are covered at 100% because I've met my deductible would reset in July next year instead of November of next year. And so I remind people that, and just being really, really honest, I think people are used to it being for one full year. And so that not a full year, that first year does kind of throw a little bit of a curve. And I believe I say it about 50 times when I'm going through the plans, and invariably somebody will come back and say, you didn't tell me that it started over July 1, or I knew the plan started over July 1, but I didn't think my deductible started over July 1. So if I had to say, like, just something to be aware of, that's something to be very aware of for the HBA plans. A lot of the groups have saved so much money, in their premium, that's not really an issue for them. The other kind of couple of things is that the Home Builders Association, the plan administrator, sets a couple of rules. And one of them I mentioned was 50% of employee only premium. So you have to pay 50% of the employee only premium. They set the rules for when is someone eligible, just for ease of administration, because you can't have every single body out there having a different waiting period and a different termination period. So the way the plan is structured is that someone becomes eligible the first of the month following 30 full days. So if I hire somebody today on October 22nd, they're not eligible November 1st. They're eligible December 1st because they haven't gone through 30 full days. So that's just housekeeping stuff that I always make people be, just bring it to their attention so they're aware of it in their hiring practices. And then if someone leaves, then their coverage will go through the end of the month if they leave. So if I term somebody today, their coverage is going to term on October 31st. But then, as I mentioned, one of the great benefits of this plan is they would be eligible for COBRA because it's structured like a large group plan. But those are like the key dates. The other thing I would say is the paperwork is really easy. I've been doing this a long time, like 30 plus years, and the paperwork in our industry, will drive you insane. And, some carriers require more paperwork than others, but the paperwork, once an employer group gets their HBA quote and decides that they want to move forward with that, the paperwork requirements just to submit and get everything rolling is very, very simple. It's like 4 pages. A couple of them are just signature pages. One of them is just like, what's the name of my company? What's my billing address? What's my tax ID number, things of that nature. And so I think it's pretty straightforward. We have one person on our team that's, committed to getting all the quotes to groups, one person that's committed to doing all the service. So we've got some dedicated resources that understand how these plans work. So, but thanks for that reminder, Jeff, because that is really important.
Anybody else have any questions or anything they'd like to know?
I would like to know, just to be clear, because I'm not super ready to jump on the health insurance thing like today, but going forward, how do we reach out to all you guys? Just through the association?
Our contact information is on the association website, and certainly can make sure we get you whatever contact information you need, whether it's for us, we can email you. I can email you directly. Don't want to speak for everybody else, but I bet they can too.
And I'd be happy to send everyone on the call a follow-up email just with everyone's contact information.
Yeah, I think that'd be very helpful.
Yes, sir.
Yeah, dude, you're welcome to share. I'm sure everyone's the same, but you're welcome to share mine with whomever.
Sounds good. Thank you.
I just put my email in the chat also, just
Anybody else have anything for our panels? All right. Well, if that's all we got, then we can go ahead and end the class and give y'all a little bit of your time back. Thank y'all for being here. We really appreciate it. I'm gonna go ahead and stop the recording.